Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market simply balanced within a range, and we can see even bigger picture. The market has been stuck in a range for several days now, and it's just bouncing within a range. And eventually, of course, we're going to get a directional break outside of this recent balance that has been established here. But for now, we just have to continue treating it like a balanced market until we get some directional conviction. Bigger picture, we know that buyers are still in control. And short term, we're going to use 97.75 to 99.75 as the micro bull bear zone. And as long as the market can hold above that level, we know that the buy side can be more dominant and we can get a push up to the 04 quarter to 06 quarter pre-market resistance. And from there, potentially up to the 2009 to 2011 initial resistance. That's also the all-time high. We have a naked VPOC at 0875. And first test of initial resistance can still attract some responsive sellers, but if the push up to initial resistance is made on high momentum and high volume, then we could actually still get a break to a new all-time high. So right now it still makes sense to be nimble and be flexible because we are just bouncing in a range, and the market can actually go in either direction. Once the market tips its hand and we see some clear volume and momentum going in one direction, then we can be a little bit more aggressive, trading in that direction. But for now, we have to treat it like a balanced market, which means that, pullbacks into support can still attract buyers, pops into resistance can still attract sellers on first test. And, we just have to gauge the momentum and view the price action in real time to determine whether it makes sense to be more aggressive on the buy side or on the sell side. The last few days we've had trades in both directions, right? We've had some nice setups on the short side and some nice reversal plays, heading back up towards 2000 and beyond. So right now you do have to be a bit nimble. Looking at the other markets, NQ is looking decently strong right now and holding up quite well. TF has started to stabilize and is holding up relatively well. So right now, the buy side still has potential to hold it together, and since the bigger picture is bullish, we're still giving a little bit more edge to buyers and, being a little bit more cautious on the short side. We're waiting for the market to show us, some momentum on the short side before entering the trade. So, heading into the open, 97.75 to 99.75 is a important area to watch and see whether ES can hold above it. If it can, then we can get a move back up to 04 quarter to 06 quarter. That would be the high odds objective, and then potentially up towards 0875 and 09 to 11. On the downside, a break below 97.75 would bring yesterday's low and the 92.5 to 93.5 area into play, and potentially 89.5 to 91.75. Now, as those support zones get approached, in the event that we get a downside push, we do have to see how the internals are shaping up and what kind of momentum we're seeing on the downside. If it's a lot of momentum and we're seeing minus 1,000 to 1,200 readings on the NYSE tick, then it makes sense to be a bit cautious on even buying any pullbacks and just getting really good trade location. So that means 92.5 to 93.5 may not hold, and we may have to go down towards 89.5 to 91.75 before the market finds buyers even on first test. And again, we have to keep the idea in mind that the market's stuck in a range, but eventually it is going to break outside of this range. And if the volume picks up today, and we're heading down on high volume, then that's another scenario we have to keep in mind. That this area has been tested several times now, right? This balance low over here around 89 to 91 has been tested several times, and the more times you test a support zone, the lower the odds that it's going to continue to hold. So that's something we'll have to gauge in real time as well. That if the market does start heading down, and if it's doing it on some decent velocity, decent momentum, and internals are shaping up to be quite weak, then we could still get a balanced breakdown if the volume level is supporting it too. So, if we're running on high relative volume, and we're seeing some good momentum, and we're getting a directional push, then it makes sense to be cautious on buying pullbacks down here as well. Because we could actually just end up going lower down to 86 and 79.5 to 81.5. So right now we're stuck in this range, but we're prepared for a move outside of the range. So we're just going to look for signs to kind of confirm whether we can get that today or not. There's really no major catalyst on the day time frame today, but we do have Jolt's report out at 9 a.m. Central, and then we have the Apple launch event at 12 p.m. Central Time, and that can be a small catalyst as well. But Apple is holding up okay right now, and Q is holding up okay. So let's see how 97.75 to 99.75 gets treated off the open. That'll give us a good idea. Let's see which way momentum is leaning via the NYC tick. Let's see if internals can hold up okay, and that'll give us a good idea whether we should be buying pullbacks or just stay put, or perhaps even start shorting the market if that micro bull bear zone starts breaking and we start getting failure at that zone yet again. So those are the main thoughts heading into the open. Let's see if the buy side can hold it up, and we will take it from there.